Excellent. E- Two minutes and counting. Counting down. Okay. Clear my throat. Minions here. I got my notes. Notes from the goats. Counting down and cover some great stuff today. How's my audio? Looks good. Video looks good. I'm in the camera. I think I look good. We're counting down. 5, 4, 3, 2, 1. Oh yeah. Welcome. What's up, guys? Justin R. Harris here on my YouTube channel. You know, we talk about investments, primarily commercial, residential, luxury real estate, getting into the sports entertainment of real estate. Today, my conversation is about my day trading. Okay, so it's my day trading mentality. You guys know that I have been in the past year now, really trying to harness, and when I say try, I'm doing it, harness my day trading and really getting a grasp on having the right mentality. Is that at the end of the day, it all comes down to you following strict steps and not deviating. And whatever company trade you're looking at, you don't step outside of that. Like you literally, if it doesn't fit, move on to the next. If that day is just not looking like the right day, leave it alone, right? So those are things I want to talk about. I have some great data here. I'll actually share with you one of the techniques that I use for um, my strategy and so forth. Um, so that's kind of where I'll segue in is, the topics that I want to cover. I wrote them here on my trusty pad. Hey, so we're going to talk about my day trading mentality, right? What I do and how I get my mind ready for that trade for the day and when start doing that. When should you start doing that? For those who are just starting or getting interested, um, even just to have a good idea, right, of what they're going to do. Then it's the rituals. The other thing I want to cover is the rituals or what I practice before I trade, right? Then I want to talk about TA, which is technical analysis. So that's where I'll share with you some of my steps, speak about. I suggest that you look them up. Don't look for someone to just tell you, because if you're really interested in this, it's like what I remember in high school, what the coach would tell the players. Um, it would be like, everyone that's here on this team is looking to get to the next level. So if you're just here to play for this team recreationally, leave. There's a door, right? So at the end of the day, if you're doing this and you really want to learn, then when you hear key terms, when you hear certain things that you need to do, you need to either pause the video or finish the video and then go and Google that. Google the terms, harness your knowledge. You know what I mean? Get it all together so that you have the tools you need that are going to make you successful, right? Because we're all going to take bits and pieces from everything that we hear, right? I'm going to talk about I'm going to go into detail about one of the styles, or I'm not going to say style. It's one of the actual line styles that I use to trade. Okay, and it's called Heikin Ashi. I think it's kind of great. It's pretty cool. And I'll define that for you for those who don't know. And those who do know, I'll explain why I like that one and why it simplifies things a little bit better for me. I mean, we're all different, right? So it's what's going to help you create your edge. Then at the end of the day, I'm going to talk about when emotion creeps in, because no matter what, as much as some of us may be emotionless in some things, or um, at the end of the day, of that day, at the end of the day, of that end of that day, um, you want to be able to recognize when that's happening. Let's get right into it. First thing I want to do is explain to you guys. I don't have this whole, I could probably add in real quick, um, nice little flurries going across the screen and transitions and all that. But I was doing that before, and I just like to get straight to the point. It's like, you know what? I feel like I'm trying to do things too much of what I don't want to do. I don't want to do all that. I just want to talk to you guys. I want to share my knowledge. I want to get it in and get it out. Almost like a day trader, right? Get in and get out. That's it. I don't want to do all that other crap. Get away from me. All right. So because of that, and if you like that, do me a favor, like and subscribe. Click that bell notification for me. Um, I drop these lives once a week. I did not go live last week. I actually took my daughter to her softball evaluation. It was pretty cool. So you have to make sure that your little ones, they get it in. That's her thing, and I couldn't miss that. So I had to change and miss a day. I probably should have posted and let you guys know, for those who actually watch, but I didn't. So next time I will, and then you will know where the hell is Justin, right? All right, so let's get into it. My trading mentality, and I took some notes so that I could really explain in detail my mentality so that if you can relate to what I'm talking about, then you will know how to handle that for yourself, right? That specific stressor. I need to largen this screen right here so I make sure that when I switch to this screen, because I'm going to show you guys some cool stuff, then, we can go from there. So first thing I do to get into my trading mentality is it starts the night before, actually. So the night before, I know I'm going to get into a trade. I trade as often as I can, depending on my schedule, because I am a real estate dude, right? So I have appointments and meetings that start early, and I have my obligations. And so some days I can't jump into the market. Some days I'll be watching from my phone, and I'm like, I can, if I know I have about an hour or two in between meetings, and it's the peak times, and I'll get into that. Before I'm looking at the pre-market, because from what I'm learning right now, so the pre-market, obviously you got the pre-market, and then you have why can't I remember these terms? Aftermarket, right? So I wanted to say post-market. That entire time, post-market kept wanting to push out aftermarket. So aftermarket, boom, the market closes, right? And so you have that period of aftermarket before it hits midnight. Then it's pre-market after midnight. So what I have learned about those two is, because I've researched that, is this is when reporting is happening from that corporation that's in the market. So whoever that company is, they're reporting. They're reporting their income, plus or minus, and how that's doing and how that's performing. You have the larger institutions that are either pushing it up, down, sell-offs, and then you have some of the people that have larger investments that are riding with larger firms that are, playing that game with pumping the stock and so forth. So you'll see in the pre-market or in the aftermarket, you'll see the stock just like skyrocket or dump, depending on how that company performed, right? So I'm paying attention to that. And then I'm watching, right? I'm watching how the volatility is working in that pre-market, leading up to opening, right, at 9:30. I'm talking about the New York Stock Exchange, right? So that's the one I like to play in because I'm familiar with those companies here in the U.S. I'm familiar with looking at their names and seeing what's going on and what makes them innovative and so forth. And that's about as far as I take it, right? So from there, I'm looking at how they perform and nothing. It's things like that that help me gather, what it is that's going to make me want to get into that trade. So I'm looking at those things, and I'm taking my notes. And then what I do is, coupled with that, it's kind of almost simultaneously, right? What I do is I watch YouTube videos, and it's other people that are way more seasoned than me. Like Live Trader, that guy, freaking, he is that dude is so sharp, right? So I'll watch him, and the first thing he does is call you out for what you're doing wrong. He's like, listen, there's no reason to being nice about this. It's done. This is what you need to do, and so forth, and that's awesome, right? The whole point of watching that is not to sit there and get your feelings hurt. It's to sit there and learn from other people's mistakes, hopefully, right? If you know you're new at this, then don't jump in full-fledged. I can tell you that paper trading is great, but paper trading has a lot of tools that are not available to you, right? And unless you're going to treat that fake money like real money, like it's yours, and you really genuinely don't want to lose it, just like you don't want to lose your money, you're really not going to get that much of the same, because the game changes. It's like running on a treadmill in a gym and then getting outside and running down the sidewalk, down the street in the elements. The game changes, right? So it becomes real. And that's where people screw up, right? And this imaginary world of how day trading works doesn't exactly work in the market. And the only way you're going to learn how to swim is jump in the water. Just be smart. Don't jump straight into the deep end or you will drown. So that's where people screw up, right? And then they throw away their entire funds. And at the same time, they don't have the discipline, the mentality of sticking to your system, constantly checking your system. What I like to compare it to is like when you turn on a car. When you turn on your car, it instantly goes away. It's making sure everything is present, everything is functioning. It shoots through all of those things, balances here and there, electrical connections, everything's safe. And then it comes back down to nothing other than P, right? That you're in park, right? And then from there, and the car is on, obviously, and it'll show you headlight indicator or whatever, right? And then from there, you know, the car does its job. You start driving, it's still constantly checking the whole time. So for you, what you need to do is whatever system that you develop, right? You have to constantly test your system. And every environment doesn't exactly fit that system. So it's good to have an idea of maybe different ways of approaching certain trades, right? So maybe one or two, I would say. But definitely have one and don't deviate, right? So that's the first thing. So I'll watch the videos, right? And it reminds me of these things. I'm like, okay, I need to watch these videos. I just remember that I need to silence my phone because you know what? I'll get a freaking random phone call. And I just thought about that and I'm like, oh, let's not have that happen. It's so annoying when you're recording. So I'll do that, right? I'll watch my videos. I make sure I've looked at how companies are performing in the morning, right? I do watch the videos at night. I like when my thoughts are racing. I don't dream much, or if I do, I definitely don't remember it. So that's a plus because I don't want those. So I wake up the next morning and then bam, I'm like, all right, where's the computer? You know, let me see what the market's doing. And so get right back into it. Yeah, it's fanatical and there's nothing wrong with being fanatical. Be obsessed about whatever your passion is because that's what makes people unique, right? And that's what makes you successful. So, this is what helps me get into my mindset, exactly where I want to be when I get ready to identify the company that I want to trade with, you know. And so then I review my system details. I'll do things like I will research more, look up different websites, articles, videos about the different types of technical analysis that I like to apply. And that's the next topic, technical analysis. What works for you? You know, there's so many out there. You know, just to name a few from what I'm looking at right here, I'm just going to blurt some at you. You have VWAP, you have moving average, you have BOLL, MACD, RSI, volume, you know, all these different indicators, the Fibonacci, it's, you know, pivot point, SAR, super trend. So all of these different things, they're great, right? And they're all these different systems of equations and graphs that help you identify the way the trade is moving to give you almost a prediction of where that trade is about to go, that previously how it has been moving is consistent with it moving in this direction, this way. And because of that, maybe that's what gives you the idea or the thought that you should enter. Crazy, right? But I can tell you, this has nothing to do with being a mathematician. This has nothing to do with trying to be a PhD in freaking, I don't know, graphs and geometry. No, dude. This has to do with recognizing trends, being disciplined enough to follow a set of rules that you set for yourself, that you recognize and know how to understand, and not deviate. Just that simple. The one thing I missed in here that I don't want you to feel like is not as important, because it's probably more important than everything other than trading, is the key thing here, and it's called risk management. If you don't practice risk management, you will fall into the emotional trade and you will lose every dime, I promise you. So I can tell you that in the year and a half now that I have been day trading, I have lost about $300. Well, that's all relative. How much have you traded? Well, I've traded well over $2,000, $3,000 going back and forth. So I don't think that's bad. I think I've been doing pretty good. And guess what? These are really small trades. That was $300 of lessons for me. That's how I saw it. And I learn. I can tell you that I lose less in this type of investment. Investments is always a risk, right? You're going to lose, you're going to win. I can tell you that. And not going ridiculously over that, you'll be fine, right? There is a percentage, and if you're winning slightly more than you're losing, you are doing great, right? There's no one on here that comes on here and kills it every single day. If that's what they're telling you, they're lying to you, right? But the odds their favor, they are winning more than they're losing, and that is a successful day trader, right? And when I say successful, it doesn't matter the quantity. It doesn't matter if they're making $1,000 a day or 50 cents a day. They have a system that works, and they're following it, and they're constantly testing it, and they're in the green more than they're in the red. That's me, right? So I don't trade real big. I trade extremely small. I don't touch stocks higher than like $1.50, $2 a share, and I'll jump in and I'll buy like 50 to 100 of them, and that's what I do. And I'm in and I'm out, learning myself, learning the discipline that I need to apply, right? And so that's really what it comes down to, because it's a set of algorithms. They're moving around. You can't control it. And the more you ask questions and research them, the better you'll get, right? Because there's tons of indicators and information on these different platforms that allows you to become more knowledgeable in the trade, what's happening day by day, second by second. News, I'm not big on the news stuff, but I just tell you that I don't care who the company is. I care my trading format. That's what I care about. I'm not investing. I'm not sitting there jumping in because this company in 5 years is going to do this or do that. No, it's not the game I'm playing. I'm not here for that, right? So I like this. This is what works for me, right? So what I'm going to do is I'm going to switch over to Webull. I like Webull because it's a platform that allows you to trade without a broker in between. So the risk is more in your hands, right? Now, you don't have everything available to you like that of a broker. I understand with some of the platforms that you pay for and you pay for your trade, you have a little more available to you, like the level 2 information and so forth. But for what I'm doing, I find that as much as that is great information, I don't need it for what I'm doing. What I need is to keep my brain fixed on the discipline. I keep talking about that, right? So we're going to get right on over and switch over, and I'm going to switch my screen so that you guys can see what I want to talk about here. So right here, I'm looking at a previously performing stock. I don't want to download on this laptop. Go away. So this guy here, we're looking at BSFC. It's in the NASDAQ, right? And it looks like it closed out at $3.80. But what I wanted to show, okay, was what the graph actually looks like for those who don't know. Okay, these are called candlesticks, and it's because it looks like the little candlesticks upside down or right side up, right? And then, of course, greens are all the buys, right? And the reds are the sells, right? And there's different terms for each one of those things that suggest that you definitely look that up. Down here, these guys in the darkness here, can you see it on my screen? I am not sure. Looks like you can, kind of, sort of. So down here at the bottom of that are the volume. So you see the volume of the sell-offs and so forth, and it should be consistent with the thickness of the candlestick. And then you see the wick right here. That is the pushback. So like this one, for instance, you had It looked like it started off with a significant, it was going to be sales, 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 sales. Buyers became bigger, bigger. Sell-offs pushed back down again. So it was kind of a pushback, 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 and then it closed out. Bam. Then you had more sell-offs. The sells were higher than the buys. That's a key indication right there that you're about to have a changeover. And then bam, you had a big red candlestick here engulfing that guy right there. And then bam, you have this guy right here. This is an indecision. And so that's a key sign that we're about to switch directions at that point. And I'm going to explain a little bit more why I say that and what line style I actually use. And it is called Heikin Ashi, right? And I like that one. And let me just define that for you guys. Also sometimes spelled Heikin Ashi. So I didn't know that there's different spellings here. It looks like they spelled it exactly the same. Oh, they put an E and an I and an I and an N. Okay, well, it means average bar. Okay, in Japanese, Heikin Ashi technique can be used in conjunction with candlestick charts when trading securities to spot market trends and predict future prices, right? And this is what I was talking about. So when you have this type of line style that you're looking at, these things aren't giving you the answers. It's just helping you better predict what may occur so that you can know what decision you're going to make. And so why do I use Heikin Ashi? Because it is an easier way for me to determine when to enter and exit a trade. This is why I like to use this one. It makes the bars a little more simpler for me in observation. Now, there's a downside to that. You have to be a little bit sharper in recognizing that it is a time to get in. And then according to the candlestick, you're just a few seconds off because the Heikin Ashi is more of an average. Let's see if it says that here. It's not saying it here. But it is more of an average, right? I'm not going to get too deep into the kind of stuff they talk about. What I'm going to do is I'm going to show you. Bam. Okay, so here's the candlesticks here. This is your traditional candlesticks. This is what people are looking at. There it is, moving back and forth. Okay, so what you see over here on the right-hand side is these are the prices that it has been going up or down. Typically on the left side, you'll see percentages. And I'm not logged in on this computer. I'm logged in on my laptop, so you're not looking at all the presets that I have set up. So this one is naked. This one doesn't even have anyone logged in, as you can see over here to the right. Can you see that? I think you can see that. So, and then over here to the left is just what companies were performing, top performers of the day, which is what list I pulled from over here. Okay, so I just chose these guys because I was looking at them yesterday. I was about to jump in. Yesterday it was an exact point of I was on a meeting with contractors walking through a building space as we were getting estimates, and I'm looking at my phone like, damn it, I would have jumped in, but I would not have been able to give it the attention I wanted to give it. And I really did not want to use what's called a trailing stop loss to get in, make sure I was above, and then walk away from it and let it go, because sometimes that works against me, and I don't want to do that. If I can put eyes on it and keep eyes on it for the trade, and I know I'm only going to be staring at it for about 15, 20 minutes, then, you know, that's what I'm going to do, and I'm going to make sure I dedicate my time to that. Otherwise, I'm not being serious enough. I'm not trying to do this to be an absentee trader and trade and not pay attention. So that's why that didn't happen. So, okay, moving along right up here to the top. See this guy right here is called line style. Let's see, is it showing you? See, my little header and footer on here is kind of blocking some of the cool stuff that you guys should be seeing on here, and I apologize. But line style, so you want to click that and you want to go to Heikin Ashi. Before I click that, what I want to show you is look at these bars. Look at these guys. You see my mouse here? So you see how you have your green, 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 long candlesticks, and they all have terms. Okay, I'm not one to memorize all these terms. But first thing I'm going to do is I want to change this view to... It's not letting me do it. Up here. There we go. Sorry. So what I typically do, we're looking at after hours here. Okay. So what I typically do is first I'm going to tell you what I do before I tell you about these candlesticks and all that great stuff. First thing I do is I look at the 15-minute and I see what direction of the trend it is. Obviously, this is not it. This is not good. So this is a downtrend. I'm not one for shorting. What to do? I know to apply exactly the opposite from what I do when you're buying in the uptrend. That's not the game I want to play. I don't want to deal with having to deal with margins or anything like that, which is a whole nother conversation. I like to do this. This is my thing. We all have our one thing. This is my one thing. Okay, so this one I would not touch. However, first thing I look at is, all right, it's in a downtrend. Then I come down to my 5-minute. 5-minute is when I want to trade. And if they're both in a downtrend, I move on to the next one. I don't force the trade. There's your first emotional, what the hell are you doing, right? So if it didn't fit that, moving on to the next, right? So that's the first thing I wanted to show you guys. The next thing is looking at this right here. When you're looking at this volatility right here, it's clearly going down, down, down. Look at this guy, right? So someone did really good at shorting this right here. Look at that. They knew it was coming, sold off. Whoever didn't catch that train, they got screwed. It switched back around, bam, dropped again. So this is a higher low, right? And then what happens is it didn't get back up to where it was here. So it created a new lower high, and then looks like it starts consolidating right here. Just kind of what it did for a little bit, and then bam, dropped again, major sell-off. So whoever was riding that boat over here, they got screwed the pooch hard, right? So anyway, so you see the back and forth colors, and my point is this is what you see with the candlesticks, right? However, when you switch that view over to Heikin Ashi, now the colors are more consistent, right? Why? Because it's showing you the average of that. So now you're able to recognize, for those of you that like to short, you would have been right here paying attention. You would have saw this huge indecisive move right here, this cross, right? And it's clear right here. See the green? Bam. You saw what was happening. There was indecision right here. There was still some pushback. Boom. Bought a little bit higher. Boom. Sellers, huge indecisive move. Boom. There's the large. It's now engulfing that guy. Now with Heikin Ashi, it always starts in the middle of the average of the previous candlestick. What is he talking about? So look at any one of these. I'll pick one. Look at this big guy right here. It started here in the middle of this previous one. It always starts there. It starts at the average, and then it's going to push up or push down. And then that's what helps you understand and maintain the average. And because it does that based on an average and not from where on the second where people are buying in, which is the difference between Heikin Ashi and it follows a formula that does that for those of you that are math freaks. Right there, what it's doing is because of that average that it's performing off of, that's what makes the slight delay from how the actual candlestick is performing. So therefore, you need to be sharper in recognizing that and knowing to get in so that you don't lose that opportunity in case it changes direction. So you start seeing this. Now, what I also have going with something like this is I'll have my moving average. So I'll have my EMA, and let's see, I'll have this guy up, right? And I'll set my indicators for that. I have an indicator format that I use for that. So I'll use my EMA to figure that out. And then I'm also watching my RSI. Let's see, they have this on here. I don't see you. There you are. Bam, I'll have my RSI on there. And then I think I like to use my stop too. Bam. All right, so I'll do this, and I see my sell-offs. This is crazy. It's like, whoa, what's happening right here? And you see it's consistent with that. Now, I'll change my EMA because I need it to be set so that I can see. I have it where I have my red and my blue line. And for those of you that know, that's a whole other conversation I don't want to get into right now. I don't want to deviate too much. I do enough of that already. But I'll make sure my blue is over my red. And that's showing me that my trend is in an uptrend. right? And then I watch the gap. So when they cross over and my blue is over my red, I'm watching that gap as it increases. I'm making sure it's consistent with the trend and the indecision I'm seeing on the previous move. So looking right here, I see this indecision, right? I know that there's about to change. I look for the very next stick. And when there's no candlestick at the bottom and it's at the top, I know we're moving up. So it's all about simplifying. You want to simplify and be able to react quicker. If it takes you freaking a journey of doing quantum freaking physics before you decide to get into a trade, you're doing too much work. Holy crap, right? So these are the lessons that I'm learning. You know, don't overthink this shit. Excuse me, for those of you that are sensitive. Don't overthink it, okay? Too much information will oversaturate you. You're just going to lose your freaking mind. What you need to do is pay attention, follow your key steps, use your technical analysis, stick to your morning ritual. Do not deviate. This is what I beat into my head over and over and over until nothing else matters. When nothing else matters in my head, I'm less likely to make an emotional trade. And that's the whole point. These people that say, you know, jump on here and start making freaking $1,000 a day, $500 a day. Yes, you can get to that point, but it doesn't happen in 5 minutes. It doesn't happen from just watching their video. It doesn't happen for a few. It takes a freaking long time. Right. And it's not because it's a long time. It's a long time because it's not your daily habit. That's their habit. Okay. And now that it is their habit, they know nothing else. It's real simple for them to stop, apply their thoughts. They follow their rituals, everything I'm telling you right here, and they get into the trade. Then we have the conversation of what happens when that emotion creeps back in. I'm going to tell you how that happens. So you're on this trade, right? We obviously don't see the direction of where this one is going because this is where it has ended, right? On 121 at 1600 hours. For those of you that don't know, that is military time. Now down here at the bottom, EXT extended hours. Bam, I can click that. It's going to refresh. Now it's showing me the extended hours that happened all the way up until midnight. It should have been midnight. It stopped at 8 on Friday. Okay, maybe not. So looking at that, we are still on our Heikin Ashi. Good. And so you can see where this consolidation happened here. So when I was talking to you guys, it was this right here, right? This is where I showed you where it stopped, right? 1600 hours. Okay. After hours, they must have done their reports and it didn't look so gravy, right? Then you watch, for those of you that would be getting into after hours trades, I don't know, that's up to you. We all have our thing. There's a Goodyear blimp in the sky that just freaking redirected my attention. Okay, so so right here, indication that we're about to change direction. Okay, and so right when that happened, bam, there's your big green guy. Okay, now that doesn't mean jump in, right? So that would have shown me not to get in here just from this, and that's why I'm talking about emotion right now, is because my moving average, my estimated moving average would have shown me that this was a downtrend. So it would have been red over blue. Okay. It would not have crossed over yet because there hasn't been enough upward trend yet. So it still would have shown me that this is red over blue. So regardless of this index, I still would not have gotten into that trade. Following your rules. That's what I'm talking about. Then it comes back down to risk management. So we talked about that real quick. What I like about, I'm going to find a healthy spot here for a second for an uptrend. All right, right here. All right, come on, fix yourself. So right here over my head, see that right there? Okay, so right here, before I wrap things up, I don't want to keep you here too long. I want to wrap this up by noon. Okay, so right here, what I'm showing you is when you're looking at this and you see this happening, right? You see the indecision. Oh, there's still some more sell-offs, and then bam, a big, huge buyer indecision. And then you see the next one here. This is a brief takeoff. So this starts going. Let's say you say for whatever reason, your EMA was showing we're playing games here right now because I don't have it. But just like here, the red over blue, all right, let's say for whatever reason, it starts gapping up right there. You jump in real early, okay? And you're like, yay, I'm gonna ride this wave dollar. Um, so right here, you would have jumped in, you would have made this trend, this wave right around $5.62. See that over there? I'm pointing in the wrong direction. I'm pointing outside of the screen. It's over there. So my widescreen's only letting me go so far. Okay, so it's right over there, $5.62. Follow the mouse. The mouse is going to show you right there. So $5.62. Stay there. $5.622. Right? We gotta we gotta get that fraction of a cent in there. So this is where you got in, right? So the trick to using your stop loss is when that guy starts over, boom, you would have hit the next minute, it would have dropped down. You would have been like, oh crap, I already lost, right? Because I was at 562. Now, bam, the next time frame it jumps in 537. This is how the Heikin Ashi works. It's okay. Don't cry. It's going to move. And then it starts moving up. Okay. And look at that game go. So you don't know this is happening yet, right? So what you're going to be paying attention to, and that's why I say I don't like to do a trailing stop loss if I'm using Heikin Ashi, because the way it works is kind of funky. I don't want to do that. I like plugging in my stop loss right after I enter the trade and right after I've seen it go up above, because obviously I've already made the right decision to get in because it's an upward trend. Make sure it's right up above, and I determine my percentage based on how the volume has been moving for that day. So depending on how much it's been going up, plus or minus, and I'll pay attention over here to see that. So let's say for whatever reason the volume it's been going up, between 10 to 15 cents in jumps from all the trades, right? So I'm going to watch and I'm going to jump in right when it's about 10 to 12 cents difference. Bam, I'm going to jump in right under that 12 cents minus that. So let's say it's now at 590. My stop loss would have been somewhere around 570. Okay. So I would have just sat right there, and then it would have gone up, and I would go in there and move my stop loss up. And I keep my gap, and I do it manually. Why? Because I'm just a freak like that. I have to. This is what makes me feel happy. Okay, my little happy joys in my head tell me that this is what works for me. And I would have stayed in. It would have been gravy, right? And then for whatever reason, this next trade, it would have jumped over and dropped right here. And okay, had I done that. So that's fine. So I would have gone from here 5662 to 5842. Okay. So 22 cents. Would have made 22 cents because my stop loss at that point was at 590, right? So you got to be careful with that. You have to watch how high that one's going. Now, the way I would have been able to avoid that would have been to set my stop loss slightly below the average of that current bar that I would have been in. Then it would not have kicked me out, right? Okay. Now, it's a difference of making 20 cents on that trade or having made closer to maybe 15 cents, right, on that trade per share. And then, like I said, I don't go big. Big to me is 100 shares. I'm not freaking crazy. So this is what I'm doing because I'm not a machine at this yet. And this is what works for me. And like I said, guys, keep the emotions out. So I do that. I make sure that I have a risk management strategy that works for me, and that is my risk management strategy. As it goes up, I push up. It's just like the trailing stop loss, except I'm doing it manually, and I'm prepared to accept where it's going to push me out, and that be okay with that. Okay? Listen, guys, that's it. I wanted to wrap that up. Do me a favor, like, subscribe. I will be back. I have more knowledge on real estate always. I'm thinking about throwing in a Wednesday live too, because I feel like a week going by, I'm just missing the buck on giving you guys some updates on some critical information. And so I don't want to do that. All right, guys, thanks for checking in with me. Like, subscribe, click that bell indication. Love you guys. Those of you on Facebook, follow, share, love my videos. I'll be marketing some more of them. I haven't marketed them